Hey traders, welcome to video 2 of the Advanced Forex Strategies course. This is Corey Mitchell. In this video we are looking at understanding Forex charts, brought to you by investu.com. So a bit of review from video 1. Forex is the simultaneous buying of one currency and the selling of another. This is why we always have currencies listed in pairs. We have the Euro USD, USD JPY, GBP USD, and each currency has an abbreviation. So as we can see here, the Euro USD, that would be the Euro and US dollar in their abbreviated form. US dollar is USD, NASD is New Zealand dollar, GBP, British pound, CAD, Canadian dollar, CHF is the Swiss franc. So most pairs priced up to 5 pips, so this would be an example of a price you may see in the Euro USD. A 1 pip movement would be from 36.45 to 36.46. This is the fractional pip, so down to 1/10. JPY pairs priced to 3 pips, so this would be an example of a price you may see 102.564. And just to review again, what that means is for this pair, 1.36451 is how many US dollars it costs to buy 1 euro. This would be how many yen it costs, JPY, Japanese yen, to buy 1 US dollar. So you can always think of the first currency in the pair as 1, and then the actual price is how many of the second currency it takes to buy that one of the first currency. So we have a number of resources for free Forex charts. Here's just a few. Freestockcharts.com is one I like. Finance.yahoo.com is another one I like. NetDana, also a good site. Free stock charts and NetDana, you can set up a few of your favorite charts, save them, so more of sort of a charting platform, which is quite nice. So one of the main things to know about when you're looking at a Forex chart is that when the price on the chart is rising, it means that the first currency in the pair is appreciating relative to the second. So if the Euro USD is rising, you pull up a chart and you see that the price is moving up, that means the Euro is increasing in value relative to the USD. Forex charts only show the bid price. This is different than other markets which show the last price traded. So if you look at a stock chart or a commodity chart, typically the price that they show on the chart is the last trade that went through. Whereas in the Forex, it's a bit different. We have lots of different brokers all over the world. So that price, they'll simply show the current bid price that they are offering. And there's always 2 prices. There's a bid price and an ask price, which is what people are willing to buy and sell that currency at. So the bid price is what people are currently willing to buy it at. We're going to look at the bid and the ask in future videos when we get a little bit more into placing orders, and that bid-ask, what we call the bid-ask spread, is going to play a pivotal role in that. So we'll cover that in a future video. But for now, just know that the price on the chart is the bid price, which is the price people are willing to buy that currency at. So let's take a look at an example here. We have a chart of the British pound US dollar. So we can see since about August of 2013 we have this overall movement higher. We can see it's quite choppy, but it's making progress higher, which means the British pound has been appreciating against the US dollar. So the British pound has been rising in value. And we can see that because we know that the British pound, if we look at the pair, it's British pound US dollar. If we think of the British pound as 1, back here it was costing us, back at this point here, it was costing us about $1.50 US for 1 British pound. And over the course of almost a year, it has moved up to, it now costs $1.68 to buy a British pound. or 1.68074. So it has increased. It takes more US dollars to buy a British pound now, so the British pound has increased in value. So we can see that happening here. Back here we can see an example of, as the price was moving down, that means the British pound was losing value. In other words, the US dollar was gaining value. So always you can think of the first currency in the pair as the directional pair on the chart. If it's going down, that means the first currency in the pair is going up. Or sorry, if the price is going down, that means the first currency in the pair is going down. Or if the price is going up, that means the first currency in the pair is going up. So we can look at another pair. So here, USD JPY, we can see that it is priced to 3 decimal places, 102.503. And we had a period here where the US dollar moved up against the Japanese yen, then it fell down a little bit, and now we are moving what we call pretty much sideways. So the price is fairly static at the moment, but if it moves up, that means the US dollar will be appreciating against the yen. If it drops, that means the US dollar is losing value, or you can think of it the other way, the Japanese yen is gaining value. So that's how we interpret our Forex charts. As you can see, if you use freestockcharts.com, you can just type in different currency pairs to see what they look like. The USD CAD, for example. Like you can see, I have some analysis lines on here. And this pair also priced to 5 pips. So as we said, most are priced to 5 pips. Just the Japanese yen pairs are typically to 3. So we can see here the US dollar making overall progress higher against the Canadian dollar, but more recently it has lost a bit of ground. So the US dollar has been depreciating a bit as we move toward this side of the chart. We can see it losing value. So that means the US dollar going down also could mean, or does mean, that CAD is going up. So US dollar down, CAD up. So that's it. Go through one of those charts, either freestockcharts.com or finance.yahoo.com or NetDana. Look through some charts, and then that way you'll be more familiar with them as we start to get into some more advanced concepts where you're going to look at setting up demo accounts and setting orders, where we're going to set stop levels, and ultimately how we make a little bit of money trading Forex. So until next time, happy trading.